Today's Friday, the 12th of June, and my market observations for today coming into the final day of this week. We had a nice day of relief yesterday across all major indices. The big the big story for me is currently IWM, which is holding up the best, or has been holding up the best rather. Closed above the 10-day moving average and is currently gapping into all-time highs. So I don't know if this supports the kind of thesis that I've been speaking about in terms of complacency in the market, in terms of the fact that this is showing up in the IWM, but the S&P, the Nasdaq, and the Dow Jones are still kind of not looking that great. Yesterday was definitely a really strong day, but my interpretation of what it was the fact that market was about to enter extreme fear on the CNN Fear and Greed Index. Most major indices came into their 50-day moving averages, and they had sold off for most of the week, or the entire week. So the fact that all of that had happened, there was clearly room for some sort of relief. And the relief did come when Trump announced that he was going to cancel the US-Iran strikes, and that there's potentially a deal on the horizon in just very short term. He has been saying that pretty much the whole time. And the thing that stands out to me, or the thing that really makes me question this relief rally and if it actually has any staying power, is the fact that the market originally sold off because of the fact that the NFP figures came in super hot, and the chances of rate hikes were a lot higher, and most people were starting to price them in. So the fact that the market rallied on news completely irrelevant to that, which it initially sold off to, it makes me feel like it just wanted to latch onto anything, and ultimately it's just a complacency bounce, it's a relief bounce, and really it's not got much staying power. And the big day is obviously FOMC on Wednesday next week. The VIX did pull back quite a lot, so volatility is definitely reducing, but at the same time it's still elevated from levels to where it was when it initially started this kind of volatility spike. The dollar index did come down a lot yesterday as well, so there are definitely signs that it could be a turning point for the market, and that the selling was overdue, and that's actually all it is. So the market kind of got that out of its system, but there's mixed signs for me still. The semiconductor ETF is looking pretty strong as well, which supports the fact that the IWM is looking so strong. Space stocks coming into today, I don't really like the fact that this has happened for space stocks. I mean, it makes sense that the whole market rallied together, but I think today is really the decision time, crunch time for what the market's going to do in terms of, okay, is risk coming back into the market, or is it continuing to leave the market? Gold and silver both saw exactly what the indices saw, a little bit of relief, although still holding below their 200-day moving averages. Oil did come off a little bit even more, but it's the trend. It's staying with the trend. It is a downtrend. It's been a downtrend since the beginning of May, so no real changes there. Bitcoin had a little bit of relief as well, but no major breakout from these lows, no convincing sign that strength's coming back into the market. A positive sign is the fact that it closed above the 10-day and potentially is holding above that today, but still these signs aren't big enough for me to say, yeah, okay, it's risk on again. Market breadth indicators, solid close as well, above the 50 midpoint, but no real major movement, so no clear signs. 1 month highs overall, no real movement from the day prior, and similarly for the 52-week highs and 52-week lows, they're pretty much flat from the prior day. And then more importantly as well, bonds haven't moved too much, and I think that just reiterates the fact that the market is just still undecided in terms of what it wants to do. And really, I can't say that I expect or expected bonds to move much until FOMC on Wednesday anyway. So just to reiterate, or the news from what Trump said in the past 24 hours, just calling off the US strikes and looking like things are de-escalating. We'll see. We'll see. I don't really believe much of what he says, but I'm open-minded, and it would make sense that there's just some sort of catalyst to push the market in a specific direction. And if this is it, then great. I'm all for it. Fear and greed index was at 27 yesterday, so the fact that it's moved up slightly to 31, that's a positive sign. But ultimately, the fact that it's in this territory, I feel like there is a higher likelihood of it going into extreme fear. And then Stockby's primary breadth indicators, a massive day for the 4% movers, and these types of moves in this region, kind of 700, 800 plus. 1,000's really the kind of reading that you want to see to mark the bottoms, but this is pretty significant. The only thing that makes me question if this is just a relief or it is actually strength coming back into the market is the fact that we had these 3 consecutive balanced days, and then before that it was a massive red day. So yet to see what will come from this, but there's signs for both. I feel like I could see or I could argue a case for both outcomes, but for now, I'm coming into today just pretty neutral, but at the same time aware and slightly cautious that this could just be relief and a complacency relief bounce, and we're actually going to continue to the downside a little bit further coming into this weekend and FOMC next week.